I'm here with Gary Fatigue with a very interesting segment with Richard Greene from Centerpoint Advisors on donations, right, Richard?
Thank you, Jeff. Thank you, Gary. As I started when we introduced the segment, this is a time of year where we get a lot of solicitations from the mail, but a lot of times people save their annual philanthropy to this time of year. They see sort of what they have discretionary
This is the time
in the budget, and believe me, we see it in our mailbox. You can talk all about the email and the internet, but
since I didn't win the big lottery last night, I was going to become a Mormon so that I could get the $2 million from Romney by the end of the year.
Oh, you didn't win that?
No, I didn't win. I was convinced I was going to win.
Okay, but you're wealthy in many other ways, from what I understand.
Yes, I didn't have to win. I don't want to say more than that, but it's true. But it would have been things a lot easier.
It's fun, at least to talk about. So we're talking about the Fidelity Charitable Gift Trust and some of the advantages and the features that it provides people who want to make donations. And we talked about the anonymity. One of the other ones is that you can establish this and have it set up for multi-generational giving. Let's say the donor establishes the fund originally, but they can have a contingent trustee. They pass away, and now it's their children's trust in order to make the donations. So the legacy, the philanthropic legacy of the family can be maintained. But I think one of the most intriguing elements to their program is that they have what's called a complex asset team there, where if somebody is selling a business, typically it's going to be a C Corp or an S Corp, that's in the process or eventually pending a sale, and the donor wants to allocate part of the interest in the business to charity. The donor has to get a fair market appraisal valuation, but they will take stock in a privately held corporation until the liquidation and the transaction takes place, and the donor receives the tax deduction at the time of the donation, which is helpful because oftentimes if you're fortunate enough to sell a business that's been successful, you're going to have a significant tax element to it, so you get to sort of mitigate that a little bit. And I don't know if any other entity, perhaps in a foundation you can put certain things, but I think there's some complications. In a foundation, the donation that you put is in a private entity is at cost, your cost basis. Well, that doesn't help you very much, even though if it's worth a lot more than your cost, it doesn't help you relative to donations, tax write-offs. Here, once you have the fair market value appraisal, and that gets verified by their expert asset class team, it's valued at the fair market value. So if the cost basis is $2 million and that piece of the business gets sold for $7 million, $7 million is your contribution. Now it may be 6 months or 9 months or a year before the liquidation, the transaction actually closes, but you'll have it at the time that you make, within the year that you make the donation, and now you have a very significant sum of money to disperse. Again, if you can avoid writing a check from your checking account, from just your cash balances, although you still get a nice deduction, it's better to, if possible, donate appreciated.
Sure, because again, I'm making the deduction with after-tax dollars, whereas here I'm getting the tax deduction for the contribution, and I'm not paying capital gains tax either on the gain.
For those who want to establish an account in a family name in memory of somebody, you can title it that way. Mm-hmm. So there's tremendous flexibility. I'll talk a little bit more about the different fund options, so how your money can keep working for you. As recently as several years ago, there were 3 fund options. Obviously, a money market, there was a general stock fund, and a bond fund. Sort of covered the bases, but not particularly, doesn't replicate what you might, if you're going to keep some assets in there long term, what might look like a diversified portfolio. So they've expanded the number of options tremendously, and they range, again, still have the general stock fund or an S&P fund, an index, or money market or bonds, but they're balance funds, and as I said, about a dozen options, so that which can be managed. You don't have to keep it in one. It's your, even though the gift is revocable, it's your account, so you can allocate it aggressively or conservatively. And there's one other feature that may be of interest to some people. If the account is established with over $250,000, let's say you have a great relationship with your advisor at your advisors at Bank of New York Mellon or Centerpoint Advisors, and they've done a very nice job managing your money. And you say, and you're going to move some money into the gift trust, and you say, I'd like to fund options that you have, but I really like my advisor and I like that strategy, and I'd like to have them be able to manage my assets, continue to manage these donated assets. You can do that, as long as you establish an account with $250,000. And many times, people are very philanthropic. They have a very significant net worth, but they're not savvy about the market. And we experience that with people having a lot of questions about their 401k. They're good at making money. They may not be great at managing it and knowing how to allocate it.
Maximize their earnings on it.
Yeah, and create a intelligent investment strategy around it. So they would just as soon leave it with their trusted advisor and have it managed and work for them, because it's, in many cases, it's going to be several years before all the money is dispersed, or maybe never. A lot of times people fund these annually with either cash or appreciated securities. So it's very flexible. You know, it's very user-friendly, and at the end of the day, it's a very socially positive thing to do. So given this time of year, we get a lot of questions about if the capital gains rate goes up, what should I sell now at 15% capital gains or 20% next year? Those are some very case-specific questions, but we've also encouraged people that, well, you're going to donate some of this anyway, these highly appreciated assets. Do it this year. It's sort of like locking the game. If we have a little bit of a problem with this fiscal cliff, Apple may not be at
I've had that
$600
conversation with a lot of people about do it now while you get the advantage, because you don't know if you're going to have it next year.
Exactly.
And I think people still have trouble with that. It's like they don't see the reality of what's coming. It's almost like when you hear about the storms that are coming in the winter.
That's almost
they don't
analogy.
prepare for it. You know there's a storm coming. They've been telling you it's been working from its way down from Canada, and people still don't prepare for it until the day of. And you don't want people to do it the day of. There's really a month left, correct?
Exactly. Now these accounts can be established online in a matter of minutes. I believe they even have e-signatures and things such as that. So we help our clients establish it. People can go to fidelity.com and establish it. So there's not a lot of heavy lifting relative to that, and we would certainly encourage people to take a look at it if they're inclined to have some discretionary assets that, again, they're not going to disperse all this year right away. It doesn't really make sense to establish it and disperse it within 30 days. But you might want to do some for 2012 and do some gradually over the course of next year or the year after.
Richard, if somebody wants to get hold of you and learn more about this investment strategy, donation strategy, how would they contact you?
Well, our phone is, we're in Needham at 175 Highland Ave. Our phone is 617-213-4000, or they can reach us on the net at centerpointadvisors.net.
Thank you. I want to remind everybody this is Richard Greene of Centerpoint Advisors, talking about donations and the tax cliff. You can also find this segment on YouTube, and you can listen to it. You can also find it on our websites. And this is Radio Entrepreneur. Please continue to join our Facebook page at Radio Entrepreneurs. It keeps growing. We'll be right back after this break with Gary Fertigue and more stories of entrepreneurship.
Great.